Good evening, everyone. Doug Burson here, CPA. And last week I told you once they brought out the new application form, I would show you how to do it line by line and try to make it as easy as I possibly can so that you can get this done and get it submitted and get the maximum amount available. And so today that's what we're going to do. I'm going to go through the actual form. I'm going to show you what each line means, and I'm going to try to make it as easy as I possibly can. Now, as with everything during this is as I understand it today. This is subject to change, and who knows, may change yet again. I hope not. I think we're kind of locking in on this one, and I want to make sure you guys get this done. So let's go ahead and get started right now. Okay, so here we are. Here is the actual form, but I want to show you how to get to the form. Like I said, I'm going to take you all the way through this line by line. So what you need to do is go to home.treasury.gov. So that is the U.S. government's website, Department of Treasury, and this is where we're going to go. From there, right here in the top, it says COVID-19 relief. Click there. Over here is assistance for small business. Click that. And then down here is all our forms. So to start with, we're going to do the borrower application form for Schedule C filers using gross income, because that's the big change. That's what we're going to go through. We've done the other stuff before. So here we are. We're going to open this form. Now, zoom this in so you guys can see it. All right, so here it is. Obviously, we're just going to go through and fill this out. You're going to be a sole proprietor, independent contractor, or self-employed. So I'm going to say sole prop. Now remember, this is only for Schedule C's. If you're an S corporation, a C corporation, a partnership, you have not been deemed to get these new rules, and therefore this does not apply to you, at least for the time being. This is only Schedule C filers. I want to make sure we're clear on this. This is your trade name. So if you have a business name and a trade name that are different, go ahead and put your trade name here, as well as your year of establishment, and then your company name. Put in the full name. So if it is Doug Burson LLC, go ahead and put it all in, the full legal name, and then your NAICS code. So some of you may not know what that is. Well, if you pull up your Schedule C, like I said, I'm going to try to make this as easy as possible. Right here on your Schedule C should be your NAICS code. And that should have been on your return. Your preparer last year should have used that, or this year, depending on which year you're working off of. So that is where that comes from. All right. Then we have a couple guidelines. And for most of you, it's going to be less than 500 employees. As a general rule, if you're doing a Schedule C, this is going to be okay, so I'm not going to spend any time on this. That's going to be most of you. Your business address, your business ID number. Once again, that's going to be the federal ID number, or if you're a sole prop with no employees, it may well just be your social security number. Then you're going to put your phone number, primary contact, whoever that is, and the email address. And now we get down to the changes. If you remember originally, this was based off of net income. And so what that was, so I'm going to try to make this easy for you. It was line 31 right down here on your Schedule C. That was your income after all your expenses. What was left, even after the home office, that was line 31. Now what they've said is using IRS Form 1040 Schedule C line 7. Line 7 is right here. So what that would be is that would be your gross receipts, 100,000. I'll fill this out real simple, less your cost of goods sold. So for instance, if you are a builder, this would be the cost of your materials. If you're a retailer, you know that's the stuff that you're buying to resell. If you're a business that is more service-based and you don't have a cost of goods sold, or professional, then it's going to be the same number because there won't be a cost of goods sold. But they've moved us from line 7 from line 31, and in the case of this business, that would have been 100,000 less cost of goods sold, less wages was 25,000. We were looking at this number before instead of this number. Massive difference, obviously. Okay, so then we got to tell them what year we're using, and that matters because they've said that we've got to provide something along with the tax return to back this up, and we'll go over that more in a minute. But we are going to have to provide some things. And then they want to know the number of employees, including owners. Now we get to the calculation. So as I showed you, line 7 is what they were looking for. And so if you have no employees, it's that simple. Go to line 7. And my example here, line 7 was gross less my cost of goods sold is 75,000. So in that example, we would put 75,000. We would then divide that by 12. Gives me 6250, and we would multiply that times 2.5 for a loan amount of 15,625. The maximum that we can do is 100,000 in this box. If you made more than 100,000, then 100,000 is all you can use for purposes of this calculation. So don't put more than 100 because they're going to kick it out anyway. And you'll end up with the 15,625. I know it's doing a little goofy, but you know what we did there. The PDF, probably because the size I've blown it up, is just cutting things off. But what if you did have employees? So let's say you're a sole proprietor, but you do have employees that you pay wages. All right. In that case, what you're going to do is take your Schedule C line 7 and subtract out employee benefits, pension, and wages. So in this example here, to keep it simple, it would be the 75,000 minus 50. That is 25,000 that goes to owner. And that makes sense because 75,000 less what I paid other people in wages is going to be my wages. So it actually does make sense. So 75 minus 50 would be 25. So we are going to put 25,000 here. And we're going to divide that by 12. And that gives me 2083. And then we're going to bring this back down, and then we had employee wages, and we get to divide that by 12. So we're going to take our wages, and if we had the other lines too, pension and employee benefit programs, we'd add those together, and we would divide those by 12 as well. So in this case, we had wages of $50,000. So our average monthly payroll is going to be 50,000 divided by 12 equals 4166. We are then going to add these two together. So 2083 plus 4166 gives me 6249. And then I would multiply that times 2.5. Gives me 15,623. Now, if we're doing this one, this section will be blank. You don't get them both. And it only worked out that way because I made my numbers very round and simple so we can see it. But if you have employees, you will do it this way. If you do not have employees, back up this video, rewatch the first section we did on how you do it if you don't remember. And it's pretty simple. From there, we've now calculated it, and it's pretty easy. Now we just have to tell them what the purpose is. And I'm going to tell you, I would suggest checking every one of these. No reason not to. And if you decide that you don't need to use it for utilities, no big deal, but we were up front from the start. So I'd go ahead and check them all. We've covered the fact in other videos that they've expanded some of these, like covered property damage from riots, covered supplier costs. So there's some extra stuff in here that wasn't on the original PPP. Don't get bogged down in that at this point. Right now, what I want you to do is get this thing filled out and get it to your bank immediately to make sure you get taken care of. From there, any owners with more than 20% ownership, this part's self-explanatory. Owner name, title. I will say if it's an LLC, the title is member. Otherwise, it's probably going to be owner or whatever you call yourself. Social security number and address. Then we get down to this section. When we get down to this section, this area is voluntary. We do not have to answer this. That's up to you. But this section right down here, starting with number 1, this does have to be answered, and you do need to go through these and answer these honestly. They have loosened some of this up, but you still have to answer, and if you don't, well, they're not going to process the loan. So make sure you do this. Being in a franchise will not cause you to not be in it. There's some things there, but being a franchise doesn't stop you. So don't let that bother you. Just answer it honestly, and you should be fine. So don't worry about it. And then you're going to have to get down here. And just like we did originally, you're going to have to attest that you were negatively impacted by COVID. Answer these honestly. Read them individually. I can't answer them for you. You have to answer those on your own. And that's it. You're now ready to print this and take it into your banker and get it submitted. I do want to cover something on this real quick. They did provide us some guidance on the SBA's website. And what they're saying is that you must provide a 2019 or 2020, whichever one you're using, Form Schedule C with the loan app to substantiate the loan amount. So you are going to have your Schedule C prepared. If you're doing 2020 and you haven't filed it yet, they've said that's okay. You still can provide a copy of the 2020 as you're going to file it. And obviously you're going to use whichever one is better for you, the 2020 or the 2019. And then you may also have to provide invoices, bank statements, bank book of record, maybe a 1099, something to substantiate that you really are a small business and that you really do have a Schedule C. So I would expect that a lot of the banks are going to want you to do that, because the banks don't want you to be getting a loan that does not qualify for forgiveness. They don't want one of these loans on their books because there's no money in it for them. So the banks are going to ask for this as a general rule. Maybe some won't, but I think most are going to make you do this. So just be prepared, have it together, submit it all when you do it, and that'll help make this thing streamlined and easier for you. Okay, so now that's the first application for a Schedule C. But if you've already filed an application for the PPP, what about you? Well, two things there. One, if you already filed the original, they have said too bad, too sad, you can't amend. That may change down the road. Like we said, things have changed in this program from the beginning over and over and over and over, so I'm not going to say it won't happen. It very possibly could. Right now, they have said too bad, too sad. Same thing with the second. If you've already applied, too bad, too sad, once it's been approved, this is the deal. But if you haven't, and you've already done the first, and you haven't done the second, then we have this application. And it is in the same place as the other one we looked at. If you come back, it is second draw application for Schedule C, filers using gross income. So blow this one up. Basically the exact same application, so I'm not going to go through that all over again. All of it's exactly the same, except if your NAICS code, remember we talked about that earlier, the number from your Schedule C, if that starts with a 72, in other words, your restaurants and your entertainment stuff, instead of multiplying this times 2.5, it's 3.5. So this could be a massive bump for you that have a NAICS code of a 72. Don't lie and cheat and change your ID code. It's only going to come back to bite you. So be honest and sleep good at night. Don't get any bright ideas. And then the rest of this is pretty much the same, except that they also have this section right here that's a reduction in gross receipts. So in order to qualify for the second PPP, your gross receipts have to have dropped at least 25%. Now that's different than the number up here of gross income. This is gross receipts, and gross receipts is this line right here on your tax return. Gross receipts can be the exact same if you're service-based, but if you're doing something with a cost of goods sold involved, can be massively different from gross income, so don't get confused on that. So what you have to do is take your gross receipts from any quarter in 2020 and compare them to a quarter in 2019, and 2020 has to be at least 25% less. So you pick your quarter, 2020 you put here, 2019 you put here, you put the amount, and so right here you would say Q2 or 2Q, since that's what they're showing there. If you're going to compare the second quarter, first quarter, whatever it is, and then you put the gross receipts amount right here, and if there's 25% difference, that's going to be enough. You're going to qualify. If it's 24%, so in other words, if you had $100,000 in revenue in 2019, and this year you had $75,000 and $1, you are now just above, just below the 25%, and it will not qualify. So it has to be 25% or more of a drop from 2019 to 2020, and that's the magic number that'll get you in here. So that's really the only difference. Fill the rest of it out and get that submitted to your bank. Hopefully this has helped you guys out a lot. I know there's a lot of other things going on right now, so stay tuned. We got employee retention credit, we got changes to unemployment laws, we got stuff for everybody. So if this is helpful for you, I'm glad. Share this with any of your friends. This thing closes in 3 weeks ish. Get this out there. Share it with your friends. Anybody you know who's self-employed who maybe didn't take advantage of this, get this to them, help them, share that. I don't care. I'm not trying to make money on this. Just get it out there to people. Let's make sure we take care of everybody and go from there. Talk to you later.